Hey everyone, and welcome to my channel called The Paper Bag Investor, where we take a deeper look at investing and the principles behind it. And today I want to talk about why Tesla checks every box on my list. Without further ado, let's get into it. So when you're looking at a growth company like Tesla, you can easily look at the quantitative side and assess, is the company growing? Is it growing at an exponential rate? Is the revenues growing at an exponential rate? Are the products they're delivering growing at an exponential rate? And that's actually quite easy to do for Tesla. You can see that that is the case. And all guidance from Elon Musk suggests they will continue to grow deliveries at an exponential rate. But what's a lot more nuanced and less obvious at the surface is when you ask qualitative questions about the company. What are the qualities of the company? And you try and assess that. So I have a list of qualitative questions I'm going to walk through today. And if you have more qualitative questions you think should be on this list, please let me know in the comments below if you have ideas of questions I could add to this list. That would be awesome. But the first question is, why is the product superior to other products in this category? So we can either compare Teslas to gas vehicles and also to other electric vehicles when answering this question. And in my previous video, I explained why electric vehicles are in themselves better than gas vehicles. They're much safer, they're higher performing, they're better for the environment. They're more convenient, they'll continue to become cheaper, they're made to go hand in hand with full self-driving technology. So when you look at this first question from an EV versus gas perspective, why is the product superior to other products in this category? To me, it's really obvious that Tesla, electric vehicles themselves and Teslas are better than gas vehicles. And then when you compare Tesla to other electric vehicles, there's really no competition. Maybe some companies will come out of China as a second runner-up, but I really see no major competition at this point. So boom, that's question number one, and I think Tesla just knocks that out of the park. So question number two I have is, does the product address a large and growing market? And again, the thing I love about Tesla is every single one of these questions I've tried to look at from every angle, and Tesla just makes such strong, compelling arguments for each one. So does the product address a large and growing market? I think the whole transportation industry, more or less, is going electric. So if you think about, there's something in the range of 1.5 billion vehicles on the roads right now, and that number could continue to grow as the world grows. But even if Tesla, even if you could produce 100 million EVs a year, that would still take about 15 years to replace all the vehicles on the roads. Not saying that necessarily will happen, because EVs may last longer than, say, a gas vehicle that might last 15 years. So the overall production might be less, but that's hard to say. But the point is, EVs have a large and growing market ahead of them, extremely large. So that goes to question number three. Does the company have world-class execution and innovation? And again, when you look at Tesla, I really believe in terms of innovation, they might be the best company in the world. Elon Musk is an absolute genius himself, but also what's even better is he attracts the best engineering talent in the world. I just saw another day a report that the number 1 and 2 desired jobs for new engineers would be SpaceX and Tesla, which is amazing because it shows you they have the greatest chance of innovation if you have the world's best engineers flocking to your companies to work for you, or flocking to Tesla to work for you. From the execution standpoint, they also just have aggressive timelines and goals, and clear goals. And that's what I love about Tesla and about Elon, is he sets these very clear and aggressive goals that they try to execute towards. So does the company have world-class execution and innovation? Definitely. Yeah, definitely one of the best, the most innovative companies in the world, I would say, which is only going to cause every aspect of their company to improve. So this leads to the next question. Does the company have a clear and probable path to a 10x valuation in the next 5 to 10 years? I'm not going to get into a detailed valuation projection in this video. I'll save that for another video. But this question was definitely easier to answer a year ago when the stock was in the $200 range. Again, nothing in these videos is financial advice. I want to make that clear. But I still think that this could be the case, even if I was buying more shares today, and you could make the case for this. So this question really is about putting the pen to the paper and doing some simple math, getting out a spreadsheet, whatever I need to forecast where the valuation of the company could be going if there's actual price-wise growth ahead of them. This leads to our next question, which is the CEO and other management an owner-operator with skin in the game? There's been studies done that have shown that the stock price performance correlates to how invested or how much capital the CEO and other management has in the company, which is really, really obvious. You don't have to be a rocket scientist to figure that out. That the more your CEO is incentivized for the stock to perform, the more the management is incentivized for the stock to perform well because they themselves own more of the stock themselves, then guess what? The stock tends to do better. So this is a really good metric, though, to see how much does the CEO, how much do they actually care about the performance of the company? Are they there just collecting a huge check for being the CEO, or are they heavily invested and aligned with shareholders wanting to see the stock perform well? Elon Musk has a somewhat controversial for some people compensation package that ramps up massively with stock options as the stock performs well. But I love this compensation package because as a shareholder, it says, yeah, okay, Elon Musk is going to get a ton of money paid out to him. But really, that's only going to happen if myself as a shareholder become rich because the stock performs so well. So I know his interests in the company performing well, the fundamentals of the company performing well, which we know will reflect in the stock price performing well, is directly and completely aligned with my interests as a shareholder. So again, Tesla, with Elon Musk's kind of unusual compensation package that's so aligned, it's completely aligned with shareholders' interests. I love this for Tesla, and I love this for Elon. Elon's also said in a number of interviews that he would be the last. He's the first person to put his money in, and he'd be the last one to take his money out of the company. So, which really shows you he's all in on the success of his companies, on the success of Tesla, which shows you that he has his skin in the game. He's not just trying to walk away with a few $100 million from running this company and go sit on an island somewhere. He wants the company to succeed fully and completely. And really, there's a lot of companies you cannot say that for. There's a lot of CEOs you could look at where it really seems like, yeah, they're running the company, but they'd be happy to take a check for $100 million and retire and go sit on an island for the rest of their lives. And whether the company succeeds long term or not, really deep down, they really don't care. But what I love about Tesla, again, is Elon Musk is so aligned with shareholders' interests and has his skin in the game. And one more question I have is, does the company's product or service grow with a network effect, and to what degree? So this is a little more abstract of a question, but I think it's an important question that most people and a lot of analysts would not consider or completely understand. And there's different ways to kind of answer this question, this what is a network effect. and to what degree does it help the company you're looking at. Maybe I'll just give a few really quick examples to explain this. So if you look at Facebook, for example, Facebook has an extremely powerful network effect, or any good social media really does, because the more users are on their platform, the more users are using their platform, the more users will continue to use their platform as a network effect. If there was no one on Facebook, no one would have Facebook. They had to be the first person to join. No one would care. Same thing with other platforms. If you look at YouTube, people go on YouTube because there's good YouTubers making YouTube content, which makes other people want to be YouTubers and make good YouTube content, which makes other people watch YouTube. So there's massive network effect in the success of YouTube and how that grows. I'd also file branding, brand loyalty under network effects. So if you take Starbucks, for example, Starbucks has a network effect because it's extremely consistent. The product, the store experience, the pricing is all very, very similar to any store you go into the world. Anywhere in the world you go and there's a Starbucks store, it's almost the same experience. So anyone who's ever visited a Starbucks store and enjoyed it knows when they go to any other Starbucks store, Starbucks network essentially in the world, they can go and get the same experience. So that is a compounding customer loyalty, customer understanding. Now, if we look at Tesla from this perspective, how are they benefiting from a network effect? We can see a few ways they are. Number one is word of mouth sales. Tesla doesn't advertise. At this point, they don't need to advertise because everyone who buys a Tesla is essentially expanding a network of understanding about the company. Or your neighbor gets a Tesla, you chat with your neighbor, you test drive your neighbor's car, and you realize it's a much better product car, and then you want a Tesla. So there's a very powerful network effect just in terms of product as it rolls out. They also have an infrastructural network effect. As Tesla grows their supercharging stations all across the world, they literally create a network of charging stations where you can charge quickly and go on long road trips and expand your range for your vehicle. And it's a network effect for the customers because every single person who owns a vehicle can use this whole network of charging. And finally, a big one for Tesla is their full self-driving network effect. With every person who buys a Tesla and drives a Tesla, they're increasing their neural network and ability to grow their neural network for full self-driving. This last one, full self-driving, I think is a little bit similar to Google and their search engine. Really, to become the best search engine, you need a network of people using your search engine. It's hard for someone else to start up and build the world's best search engine because the people using the search engine, the whole network of people using it, make the search engine better. And I think this is the same kind of flywheel I see happening or will happen with Tesla and their full self-driving, is that people driving the vehicles, a large scale of people driving the vehicles are going to be able to train the neural network to become better. So yeah, those are some thoughts why Tesla knocks every single one of those qualitative questions out of the park. Really want to hear from you guys though. If you have other questions you think should be asked to analyze a company before investing, please let me know in the comments below. Again, nothing in these videos is financial advice. I want you to do your own thinking and research. And if you enjoyed this video, please consider hitting that thumbs up down below and subscribing. Thank you so much for watching, and we'll see you in the next video.